All right, what do you make of what's coming up this week? Again, some economic reports. We just mentioned jobs and inflation, obviously two big factors for the Fed. Does it just matter for the Fed, or do you think it matters for the markets in between now and the next Fed meeting?
Well, what we learned from the Fed last week was that they increased their forecast for GDP, they lowered their forecast for inflation, and they kept unemployment right where it is. So I'm not expecting too much out of this week's reports. And in fact, I'm not expecting too much out of the Fed next year. I think investors should turn away from the Fed, stop playing the interest rate guessing game, and focus more on where the money is being spent.
All right, well, the money's being spent, at least over the last week, materials, financials, cyclical sectors, but that action seems to be driven by the Fed. So don't these reports matter a lot for investor sentiment and where they might try to put the money?
I think they do, but I think the larger focus is on where the billions of dollars are being spent, and that is still on AI infrastructure. That is still on aerospace and defense. That is still on power solutions to power this AI revolution. And of course, it's on healthcare, specifically as it relates to small cap biotech M&A.
All right, so you're bullish, sounds like, on healthcare.
Yes.
Are you bullish on the markets next year in general?
I am. Overall, I'm bullish on the market overall. I don't think it's going to be similar to the first 3 years of this bull market run. I think there'll be more choppiness. I think there'll be more short-term bouts of volatility. But overall, I think the markets move higher again next year.
Yeah, by the way, over the weekend, we got Evercore's 2026 price target, 77.50, about a 13% upside from Friday's close. And
good.
Saying something very similar to what you're saying. Expect more volatility, swings magnified by equity valuations, top-heavy index concentration, economic and political and geopolitical uncertainty. You seems like you're seeing it the same way. So it's very interesting that you're also seemingly agree with him that it's time to get back in the AI trade in 2026. Your word for us is cooling.
Yes.
It's not the winter weather we're getting. You're talking about cooling of data centers, and your pick is in the data center space. Explain why this is a great pick right now.
Certainly. So while the temperatures are cooling outside, cooling-related investment opportunities are certainly heating up, specifically as it relates to those companies in the industrial sectors that supply cooling solutions to data centers. We like Comfort System, ticker symbol FIX. Stocks up over 142% year to date. Over the last 5 years, 82% annualized. Trading a little bit rich, but they're also being added to the S&P 500 on December 22nd, which provides yet another tailwind for the stock.
You're saying from ETF buyers or just sentiment?
ETF buyers and index-oriented investments.
Okay. Everybody seems to be trying to figure out ways to play the AI trade outside the Mag 7 in recent weeks. As you're looking at this name, kind of an industrial name,
yes.
Why not just play the industrial sector more broadly? Why just this name? Why not the whole sector when there seems to be so many beneficiaries?
I believe there are multiple beneficiaries within the AI ecosystem. But if you look at cooling alone, you have Comfort System, you have Modine Manufacturing, you have Vertiv Solutions. But even go beyond that into the construction companies like AECOM. There is many ways to play the AI infrastructure play without jumping into that volatile semiconductor and chip space, Frank.